Crypto Pirates Daily News. January 27, 2022. News headlines. A brief history of El Salvador's cryptocurrency battle with the International Monetary Fund. Vitalik Buterin talks about the advantages of non-transferable NFTs. The fundamentals of cryptocurrency are more solid than ever. A well-known computer engineer cracks a Trezor wallet containing $2 million in cryptocurrency. Kazakhstan prevent power supply to crypto miners. Is Facebook's DM coming to an end? As cryptocurrency prices crash, so will Nvidia's stock. Are you looking for a new cryptocurrency opportunity? Purchase Helium. Another reason why Solana is the best cryptocurrency to buy right now. Understanding DeFi applications in the post-fintech revolution. A brief history of El Salvador's cryptocurrency battle with the International Monetary Fund. Investing in cryptocurrency is a dangerous endeavor, all the more so when you're wagering on a country's future. Nonetheless, it is a risk that El Salvador's president is eager to take. Nayib Bukele's Bitcoin spending spree has been welcomed by crypto enthusiasts but slammed in the traditional financial world. The IMF has been one of his most strident critics. The International Monetary Fund has frequently pressed El Salvador to reconsider Bitcoin's legal status, much to Bukele's consternation. Here is a brief history of the lender's dispute with the Central American country. El Salvador seeks IMF money in March 2021. Days after Bukele's ruling party secured a resounding election victory, a government official tells Reuters that El Salvador has requested $1.3 billion in IMF financing. Finance Minister Alejandro Zelaya believes the agreement will assist in bridging fiscal shortfalls and lowering the country's debt-related costs. The IMF had already made an emergency loan to El Salvador to assist with the 2020 epidemic, as it had done for a number of other nations. Analysts fear that Bitcoin will jeopardize an IMF deal in June 2021. Bukele intends to legalize Bitcoin as a form of payment in El Salvador. Proponents argue that the move will benefit Salvadorans without bank accounts, make remittances more efficient, spur economic development, and lessen the country's dependency on global financial institutions. The suggestion, however, raises questions about the IMF pact. Siobhan Morden, an analyst at Amherst Pierpoint Securities and head of Latin America Fixed Income Strategy, believes Bukele's remarks regarding Bitcoin could derail the negotiations. This could be a long-term endeavor or a showy public relations stunt, yet, it demonstrates a lack of coordination through rash pronouncements that contradict a coherent economic plan. Congress approves a Bitcoin law in June 2021. El Salvador's Congress endorses Bukele's proposal to adopt Bitcoin. In 90 days, the digital asset will become legal money alongside the US dollar. The exchange rate between Bitcoin and dollars will be determined by the market. July 2021, the International Monetary Fund, IMF, advises against the use of cryptocurrency as legal cash. The IMF warns countries against utilizing cryptocurrencies as legal money, as El Salvador prepares to do. The lender asserts that the measure could jeopardize the lender's financial stability and integrity. According to the FT, Ricardo Castaneda, senior economist and El Salvador coordinator at the ISFI think tank, Bukelel's ambitions could affect relations with the IMF. I believe they did not consider all of the ramifications. It is a test. It will be interesting to watch whether or not it works, but the ramifications are severe if it does not. Bitcoin adoption occurs in September 2021. El Salvador is the first country in the world to legalize Bitcoin as a form of payment. Citizens will be able to use the cryptocurrency to make purchases, pay taxes, and send remittances as a result of this action. Additionally, a new digital payment method is launched, the Chivo e-wallet. Citizens who download the app will be rewarded with a $30 gift card. The initial rollout is beset by technical difficulties, protests, and a poor rate of adoption. Critics believe the decision will further deepen the country's debt crisis. A day before the law takes effect, Bukele purchases additional Bitcoin following a price drop attributed to the IMF. Not all of his attempts to acquire the dip, however, are precisely timed. October 2021, Bitcoin is positioned as a positive factor in the IMF pact. El Salvador's central bank president maintains that adopting Bitcoin will not obstruct negotiations with the IMF. Rather than that, he argues, the talks will center on the project's benefits. We do not perceive any dangers. Perhaps there are downside risks. Bitcoin will evolve into a payment system, a financial inclusion tool. November 2021, Bukele announces the creation of a Bitcoin city and a Bitcoin bond. The IMF offers another warning. Bukele presents plans for the world's first Bitcoin city at a ceremony in the seaside resort of Misurata. The 40-year-old, wearing his signature backwards baseball cap, informs the crowd that the city would be erected near Venezuela's Conchagua volcano. The volcano would generate geothermal energy for the city as well as Bitcoin mining. According to Bukele, revenue will come from a sales tax and a $1 billion issuance of sovereign bonds backed by Bitcoin. The $1 billion in bonds will be used to fund the construction of energy and mining infrastructure. The remainder of the funds will be invested in Bitcoin. The announcement coincides with the IMF's initial conclusions following a visit to El Salvador. The message cautions the country to exercise caution when it comes to Bitcoin. Recently announced plans to invest in Bitcoin using proceeds from new sovereign bond issuances, as well as the consequences of more widespread Bitcoin trading, will necessitate a very thorough review of the implications for, and potential risks to, financial stability. Bukele emphasizes the positive. He points out that the IMF's report lavishes praise on his government. January 2022, the International Monetary Fund, IMF, advises El Salvador to discontinue the use of Bitcoin as legal money. The International Monetary Fund concluded a conversation with El Salvador by recommending the country to delete Bitcoin's legal tender status. The fund's directors emphasized the significant dangers connected with Bitcoin use on financial stability, financial integrity, and consumer protection in a statement. Additionally, they express concern about the dangers inherent in the issuance of Bitcoin-backed bonds. Bukele reacts with a meme, which fits his image as an edgelord. The IMF appears unlikely to give finance without modifications, but Bukele shows no indications of relenting. Their standoff is likely to persist until Bitcoin hits a critical tipping point. Vitalik Buterin talks about the advantages of non-transferable NFTs. The Ethereum co-founder expressed his opinion on the need for soulbound tokens. Vitalik Buterin, co-founder of Ethereum, has written an opinion piece on non-transferable NFTs, arguing that in some cases, token transferability is counterproductive. Genuine non-fungibility. Non-transferable tokens, according to Vitalik Buterin, could benefit Ethereum users. Today, Vitalik Buterin wrote a blog post about the possibility of soul-bound NFTs, or NFTs that are truly non-fungible in the sense that they cannot be sold or separated from their owners. Using World of Warcraft terminology, a soul-bound item is one that cannot be sold or separated from the player who carries it. Buterin used the majority of his post to consider the same concept in relation to the NFT space, where most NFTs can currently be bought, sold, or transferred from owner to owner. While transferable NFTs have their place and can be extremely valuable on their own in supporting artists and charities, Buterin wrote, there is also a large and unexplored design space of what non-transferable NFTs could become. To demonstrate his point, Buterin provided a number of examples, both real and hypothetical, of situations in which transferability is not a desirable property in an NFT. He cited POAP, the Proof of Attendance Protocol, which distributes NFTs to users who can demonstrate that they personally attended an event. While POAP tokens are technically available for trading on OpenSea, Buterin argues that their primary use case, signaling that a person actually attended an event, would suggest that they would make more sense as strictly non-transferable tokens. Buterin also suggested that non-transferable, soul-bound tokens of governance rights might make more sense. Rather than allowing for the outright purchase of governance tokens, which could easily result in the wealthiest or most power-hungry individuals amassing an undue proportion of them, Buterin proposes that governance tokens be bound to key stakeholders in a network or organization. Citizenship or residency NFTs, for example, could have voting rights, similar to CityDAO's citizen NFTs. However, unlike CityDAO's NFTs, which are still transferable, Buterin's governance NFTs would be soul-bound, and only available to real-world residents of the city. Buterin was careful to mention privacy concerns, noting that some technological innovations would be required to ensure that the entirety of a person's on-chain data is not publicly mapped to their name and face. He did, however, mention a few fairly simple technical options, including the use of ZK snarks. The Ethereum co-founder concluded his post by pointing out that, while most blockchain innovation and research is done with maximum transferability in mind, there are real use cases for NFTs that would perform their functions more efficiently if they were truly non-fungible. He concluded the post with a simple request to the crypto community to pay attention to the points he had raised. If we can do it, it opens a much wider door to blockchains being at the center of collaborative and fun ecosystems that aren't just about money, he wrote.
The fundamentals of cryptocurrency are more solid than ever. The recent sell-off was largely driven by concerns about the Federal Reserve of the United States' quantitative tightening and projections of higher interest rates, but crypto fundamentals are stronger than ever. 2022 crypto markets did not get off to a good start, with asset prices falling sharply since the new year, a trend that began in November last year. Bitcoin, BTC, and Ether, ETH, the two most valuable cryptocurrencies by market capitalization, have fallen 45 and 48.2%, respectively, since their all-time highs. The overall market lost $757 billion in market capitalization over the last 30 days. In a new report from American crypto asset managers Bitwise, authored by Chief Investment Officer Matt Hogan and Director of Research David Lawant, the authors blame the downturn on market sentiment. Weak sentiment is driving the market lower, even as fundamentals remain strong, the report says. The Bitwise 10 index has fallen more than 20% in the last week. The market is likely to continue experiencing short-term volatility as it works through macro challenges, the report reads. However, our experience with previous crypto pullbacks, along with the space's strong fundamentals, leaves us optimistic about the long-term outlook. There has been a significant shift in the sentiment of the financial markets. Over the last 3 months, the most significant driver of the crypto market's decline has been a broad shift in capital market sentiment away from risk-on assets, such as tech stocks and crypto, and towards risk-off assets, such as sovereign bonds. This movement is being fueled by an emerging consensus that the Federal Reserve will soon begin tightening monetary policy in order to combat inflation. The Nasdaq Composite Index is down more than 10% from its peak in November 2021, and many technology stocks are down 20% or more as a result of this shift in sentiment. The recent sell-off is reminiscent of the market's discomfort with a more hawkish Fed in Q4 2018, says one analyst. The Fed's stance then, as now, sent risk assets tumbling across the board. The Nasdaq Composite fell 18% during the quarter, and the Dow and S&P 500 had their worst Decembers since the Great Depression. Bitcoin fell 44% in the same quarter, according to the report. Though weak sentiments are most likely to blame for the recent drop, crypto's fundamentals remain strong. 2021 will be the best year for cryptocurrency fundamentals ever. According to the report, crypto's fundamentals were strengthened more than ever last year. In 2021, venture capital investors will have invested more than $30 billion in cryptocurrency startups, more than in the previous 5 years combined. In 2021, the number of developers working in the crypto ecosystem increased by 75% over the previous year, setting a new all-time high. The number of people who use cryptocurrency applications increased dramatically last year. For example, from 1 million to 21 million monthly active users of MetaMask in 2021, the number increased more than 20 times. Crypto will cross the mainstream divide significantly in 2021, according to a new study, with the majority of the world's largest banks now investing in crypto and/or blockchain projects. In 2021, public markets opened up to cryptocurrency in a big way, led by Coinbase's debut at a $80 billion valuation, the largest debut in the public markets in any industry last year. Prior to 2021, cryptocurrency was primarily concerned with Bitcoin and digital gold, at least among mainstream investors. However, it has added numerous new markets in the last year, including DeFi, NFTs, DAOs, the Metaverse, and Web3. All eyes are on the executive order issued by the Biden administration. Markets will closely monitor both potential changes in Fed policy, which are unlikely in the short term, and the release of the Biden administration's executive order on cryptocurrency in February. According to Bitwise's report, the market currently expects a fairly bearish directive, with a strong emphasis on systemic risks, investor challenges, and criminal activity issues. Any indication that these concerns are outweighed by the positive effects that crypto can provide, whether it is technological innovation, economic competitiveness, or more efficient access to capital, would be welcomed by the market.
A well-known computer engineer cracks a Trezor wallet containing $2 million in cryptocurrency. In 2018, friends invested $50,000 in Theta, but were unable to access their Trezor ones. They are now $2 million richer, though, thanks to the assistance of a single hacker in cracking the wallet. With the assistance of famous computer programmer and hardware hacker Joe Grand, New York City entrepreneur Dan Wright recently regained access to more than $2 million in cryptocurrency stored in a Trezor One hardware wallet. In a recent YouTube video, the Portland-based hacker known as Kingpin detailed how he cracked the wallet in order to recover the lost crypto funds. The beginnings. Dan Reich and a friend spent $50,000 earlier in 2018 on the newly minted Theta cryptocurrency, which was selling at roughly 21 cents at the time. They initially stored the tokens on a Chinese exchange but were forced to move them to a Trezor One hardware wallet due to the local government's increasing crackdown on cryptocurrencies. They overlooked the coins, however. Reich soon realized his error and sold the Theta tokens. Nevertheless, his friend had already misplaced the piece of paper on which he had written the wallet's PIN, and they were forced to begin guessing the 5-digit PIN. They have already made multiple incorrect guesses at this point. After 12 erroneous guesses, the duo decided to call it quits, as the wallet's data would be immediately deleted after the 16th incorrect guess. $50,000 $2 million profit. As the price of Theta has continued to rise over the years, the value of their lost cryptocurrency fortune has increased to $2 million this year. Reich and his associates increased their efforts to recover access to the monies, motivated by their crypto windfall. They soon located a Swiss banker who claimed to have French friends capable of cracking the wallet in a laboratory. They insisted, however, that Reich not visit the lab or be aware of the identities of those allegedly cracking the wallet in order to perform the job. Despite how absurd the concept seemed, the duo was willing to take a chance as their situation deteriorated. Reich discovered Joe Grand in the United States, though, in a surprising turn of events. A hacker is a lifesaver. They contacted the computer engineer immediately, who agreed to assist. Grand purchased 3 identical wallets and flashed them with the same firmware as Reich and his friend. He spent 12 weeks experimenting until he discovered a means to recover the forgotten PIN. Grand stated that he utilized a fault injection attack, which alters the voltage applied to the chip, to circumvent the wallet's microcontroller's security. It protects against hackers reading RAM and gaining the PIN required to open the wallet and its contents. Essentially, we are inducing misbehavior on the silicon chip inside the device in order to circumvent security. And what ended up occurring is that I was sitting here monitoring the computer screen and noticed that I had defeated the security, the private information, the recovery seed, and the PIN I was looking for all popped up on the screen, the hacker added. Reich and a friend reclaimed their $2 million cryptocurrency fortune and gave Grand a share of the loot. Trezor takes action. Meanwhile, shortly after the story broke, hardware wallet maker Trezor sought to reassure consumers by stating that the vulnerability Grand used to retrieve the stolen cryptocurrency had been detected and remedied. The business said that all new devices are delivered with a patched bootloader and thus do not contain the vulnerability. Kazakhstan prevent power supply to crypto miners. Kazakhstan was forced to take drastic measures due to a massive power outage. Yesterday, Kazakhstan, Kyrgyzstan, and Uzbekistan experienced a major power outage, which could redraw the crypto mining map once more. So, what happened? On Tuesday, January 25, a massive power outage caused a total blackout in Kazakhstan's south, most of Kyrgyzstan, and eastern Uzbekistan. According to TASS, the power outage also affected the capitals of Kyrgyzstan and Uzbekistan. Because the energy systems of these former Soviet republics are interconnected, the outage caused multiple problems. According to the Cambridge Bitcoin Electricity Consumption Index, Kazakhstan's average monthly hash rate share in August 2021 was 18.10%, placing the country second only to the United States in Bitcoin mining. This could change soon, as Kazakhstan's miners have already been cut off from power until the end of January. Miners have reportedly threatened to leave Kazakhstan if the power grid is not restored. The world is becoming more unfavorable to crypto mining. The United States, Kazakhstan, and Russia are the top 3 Bitcoin mining countries. Recent regulatory developments appear to be concerning. Fitch Ratings recently expressed concern in the United States that cryptocurrency mining could pose a risk to power utilities. In Russia, the central bank announced its intention to outlaw cryptocurrency mining, although it looks that the Russian Ministry of Finance is against this idea. Miners in Kazakhstan have already been disconnected from power, and it remains to be seen whether the industry will resume normal operations in early February. Kazakhstan has recently experienced unrest, and it may be more politically expedient to blame the outage on miners rather than looking for other causes. Mining regulatory risks in Kazakhstan have clearly increased in recent days. Miners require access to low-cost, dependable electricity, and the number of countries that can provide this service is limited. At this point, it appears that the United States' share of global crypto mining will grow, making mining particularly vulnerable to any US regulatory action.
Is Facebook's Diem coming to an end? According to rumors, Diem is looking for a buyer after failing to obtain regulatory approval. It appears that Facebook's Diem is coming to an end before it even gets off the ground. According to sources close to Bloomberg, the project is considering selling its assets in order to reimburse investors and redeploy its engineering workforce. Since its announcement in the summer of 2019, Libra, Diem, has had the extraordinary effect of uniting both authorities and the crypto community in opposition to it. Given that the Facebook group of companies has a combined user base in the billions, some saw the project as beneficial in terms of exposure. Taking this into consideration, the Winklevoss twins declared, "We need to be frenemies." However, the Cambridge Analytica scandal erupted in the summer of 2019. The result was a $5 billion fine levied by the Federal Trade Commission for Facebook's role in violating consumer privacy. While this isn't the first or even the last scandal involving the social media behemoth, Cambridge Analytica set the stage for anti-Facebook sentiment that persists to this day. Accepting Libra, Diem, was always a big ask with that. Facebook Diem was always a difficult sell. As a global payments system backed by multiple assets and currencies, Facebook's Project Libra had lofty goals. Recognizing Facebook's negative connotations, the entity structure focused on attracting 100 equal founding members. There was a strong emphasis on no single entity, including Facebook, having control over the project. Initially, a slew of big names, including PayPal, MasterCard, Uber, and Visa, chipped in the $10 million founding member fee to join. However, as the project gained traction, so did regulatory pressure. A hearing on Libra, Diem, was held by the United States Senate Committee on Banking, Housing, and Urban Affairs, and the discussions were not productive. Senator Sherrod Brown set the tone for the hearing when he declared Facebook to be dangerous. He then discusses anti-competitive practices, behavioral algorithms, and fake news. Through scandal after scandal, Facebook has demonstrated that it does not deserve our trust, and it should be treated as the profit-seeking corporation that it is. Similar remarks were made by France's finance minister, Bruno Le Maire, who stated that such an entity threatens sovereignty and increases financial risk. How the plot unravels. Facebook tried again, rebranding as Diem and scaling back its plans to offer a stablecoin backed by the US dollar. Earlier this month, Zuckerberg clarified that Diem would not launch without first receiving regulatory approval in the United States. Before that, however, the cracks were beginning to show. Former Diem lead David Marcus announced his departure at the end of November 2021 to focus on other projects. According to insiders, the Fed's opposition was the final blow for Diem, which is now attempting to recoup whatever assets it still has. The association reached an agreement with Silvergate Capital Corporation to issue Diem, but opposition from the US Federal Reserve dealt the effort a final blow, according to the People.
As cryptocurrency prices crash, so will Nvidia's stock. The bursting of the crypto bubble appears to be a bigger threat to NVDA stock than ever before. Nvidia, VDA, stock will almost certainly outperform the Nasdaq exchange and the S&P 500 in the long run, thanks to strong demand for its chips from data centers and companies incorporating artificial intelligence. However, there are numerous indications that the bursting of the crypto bubble will have a significant impact on NVDA stock in the short to medium term. I've previously warned that a crypto crash could derail Nvidia's stock performance. Recent events, however, have made me much more certain that cryptos are about to crash, and that the fall is likely to reduce Nvidia's stock price significantly. Furthermore, even if cryptos do not plummet dramatically, recent developments have Nvidia's revenue from crypto miners on the verge of falling. The cryptocurrency bubble has burst. Bitcoin, BTC, and other prominent cryptocurrency names have fallen in recent weeks, defying crypto bulls' predictions. Bitcoin has dropped 37% in the last 3 months, Ethereum, ETH, has dropped 38%, and Cardano, ADA, has dropped 49%. And, while I am aware that there are thousands of other cryptocurrencies, some of which have recently rallied, I am skeptical that the gains of those flash-in-the-pan names will be sustained as the overall macro environment for cryptos becomes more bearish. For 2 reasons, macro trends are becoming more challenging for cryptos. One is that government stimulus in the United States is rapidly fading, while the Federal Reserve is about to dramatically reduce its own accommodations and has already begun doing so. The recent, sharp drop in the top cryptos in the aftermath of stimulus cuts and a surge in inflation has reinforced my belief that government stimulus, rather than inflation or concerns about traditional currencies, is the primary factor determining crypto prices. Increased government regulation is another macro factor that will make the crypto environment more difficult. In the United States, Securities and Exchange Commission, SEC, Chairman Gary Gensler wants to regulate cryptocurrency exchanges this year, and the Internal Revenue Service, IRS, is also cracking down on cryptos. Worryingly for Nvidia and NVDA stock, the Russian central bank recently urged the country's government to prohibit crypto mining. According to CNBC, Russia is the world's 3rd largest player in Bitcoin mining, trailing only the United States and Kazakhstan. Furthermore, following mass protests in Kazakhstan, the government may enact new crypto regulations. Russia's central bank complained that cryptos hampered its ability to control monetary policy, saying the quiet part aloud. I've long warned that governments will be vehemently opposed to cryptocurrencies for this reason, and the Russian central bank's statement validates my theory. As a result, I believe we've only seen the tip of the iceberg in terms of government regulation and crypto stifling. Cryptocurrency mining and NVDA stock. Seeking Alpha contributor Enna Tuition explained in an intriguing column published on December 27 that the demand for gaming graphics cards by crypto miners has significantly increased the average selling prices of NVIDIA's graphics cards. In fact, Enna Tuition claims that the prices of NVIDIA chips have more than doubled in some cases in less than 18 months, and they attribute the increase to crypto miners. As a result, if cryptocurrency prices fall and crypto miners stop purchasing NVIDIA's gaming cards, NVIDIA's overall gaming revenue will most likely fall. And, even that NVIDIA's gaming revenue in the third quarter was $2.94 billion, out of a total Q3 revenue of $7.1 billion, such a drop would be significant for NVDA stock. Meanwhile, even if cryptos do not fall, NVIDIA's sales from cryptocurrency miners may be on the decline. This is due to a number of factors, including the possibility of a mining ban in Russia and Intel's, INTC, entry into the gaming card market this quarter. Furthermore, the Seeking Alpha contributor believes that Ethereum's impending shift to a proof-of-stake model will significantly reduce demand for NVIDIA's gaming cards. NVIDIA's revenue from cryptocurrency miners appears set to fall, lowering the company's top and bottom lines significantly. Investors will most likely be able to purchase the shares at a much lower price at that point, so it makes sense to hold off on purchasing the shares for a little longer. Are you looking for a new cryptocurrency opportunity? Purchase Helium. Many cryptocurrency investors have been shaken by the recent price drops, with the last few days of steep declines painfully punctuating the downward trend. Despite the volatility, it appears unlikely that blockchain will vanish into thin air. Rather, crypto investors must now decide whether to take advantage of this opportunity to increase or rebalance their holdings. This appears to be an excellent time to take advantage of some excellent bargains on the cryptos that are most likely to strongly rebound. However, it is more important than ever to concentrate on cryptos with solid fundamentals and promising future use cases. Helium is an excellent choice for those looking to add a new cryptocurrency to their portfolio, HNT. Returning to the scene. Helium is one of the cryptos that appears to be on the mend. It's currently trading at $28.63, up more than 19% from its low on Tuesday. But first, let's take a step back and look at its market performance over the last year. Helium's extremely successful 2021 reached a high price of $52.71 in November. That is a significant improvement over the current situation. Helium doesn't get as much attention as the top few most popular cryptos, but it ranks at number 40 in terms of market capitalization. It also has a very practical use case. It provides a decentralized, blockchain-powered wireless network for Internet of Things, IoT, devices. It claims in its closing 2021 Helium blog that it is achieving the fastest wireless network rollout in history. How does it function? The Helium network's technical solution is to enable battery-powered devices to send small amounts of data over long distances using an open-source protocol called LongFi. It currently has over 500,000 hotspots spread across 163 countries. Helium announced a Helium 5G hotspot partnership with Dish Network in 2021. In addition, in 2021, Helium launched a pilot program to provide IoT infrastructure to San Jose, California as part of the city's journey to become a smart city. As a benefit to the local community, that initiative will also help low-income families gain access to the internet. It, like many new cryptos, has had its fair share of technical difficulties. So far, most have been related to its high usage and rapid growth. In November 2021, the Helium network experienced some disruptions due to unexpected network block sizes and states. The team resolved the issues relatively quickly, no data was lost, and as a result, additional optimization and design safeguards were added. Hotspot hardware has also experienced supply constraints at times, but the community now supports a broader range of third-party hardware vendors. Helium has so far flown high, gracefully learned some lessons, and is rapidly growing. At today's low prices, it appears to be a cryptocurrency worth stockpiling.
Another reason why Solana is the best cryptocurrency to buy right now. Solana is one of the most promising cryptocurrencies, which is why the launch of Solana funds demonstrates that this crypto stock is one of the best to invest in. Over the last decade, the cryptocurrency industry has seen its share of ups and downs. Despite the current significant sell-off in cryptocurrencies, the industry's transformation over the last 2 years has been unprecedented. This, in my opinion, makes now an excellent time to buy the best crypto stocks while they are still cheap. The amount of development going on in the blockchain industry, combined with institutional and corporate interest, indicates that it has a lot of potential to have a significant impact on how we live in the future. Furthermore, the fact that so many crypto stocks are going public, as well as the continuous increase in the options for investors to gain exposure to the space, demonstrates that it is becoming more mainstream. So, even though markets are volatile right now, it makes sense to look for the best crypto stocks to buy. And, of all the crypto stocks to buy, Galaxy Digital Holdings, GLXY, appears to offer the best long-term opportunity. Here's why Galaxy Digital is one of the best crypto stocks to invest in. Most crypto stocks available to investors today provide a one-of-a-kind way to gain exposure to the industry. However, in general, each cryptocurrency stock only provides one or two ways to expand its business. During rallies, crypto mining stocks, for example, have enormous growth potential. They are, however, highly volatile and are linked to the price of cryptocurrencies. Furthermore, mining is highly competitive, and much of the industry is attempting to shift away from mining and energy-intensive proof-of-work consensus blockchains. Crypto exchanges have potential as the industry grows in popularity. However, there is a lot of competition from other exchanges as well as decentralized exchanges. Again, crypto exchange stocks only provide exposure to the increasing popularity and interest from investors, not necessarily the potential of new technology or products such as NFTs. This is why, in my opinion, Galaxy and its 5 strategic lines of business offer investors so much long-term growth potential. It has mining operations and benefits from the growing popularity of the industry, but it also provides much more. Galaxy has a fantastic trading business in which it can act as a market maker for institutional clients. It also has an investment banking division that provides advice on mergers, acquisitions, capital raising, and other matters. Furthermore, its principal investments division is constantly looking to invest in early-stage, up-and-coming cryptocurrency or blockchain projects. It has previously invested in several NFT projects. And, recently, Galaxy has demonstrated why it remains one of the best crypto stocks to buy by constantly innovating and launching new products. One of these is the high-potential Solana funds. Why does the launch of Solana funds demonstrate that Galaxy is a great long-term investment? Galaxy's adaptability and ability to launch new projects with high potential but low demand from institutional investors make it one of the best long-term growth stocks to buy. Solana, SOL, a smart contract-compatible blockchain network created to address the scalability issues that current blockchain networks face, has been one of the best-performing cryptocurrencies over the last year. Solana can handle 65,000 transactions per second, which is a significant improvement over much of the current technology on the market. So, when Galaxy Digital announced last month that it was launching a Solana fund for accredited investors, it was yet another sign that the company is looking for new ways to expand its business and grow alongside the high-potential cryptocurrency industry. So, despite trading more than 60% below its 52-week high during this market downturn, Galaxy Digital appears to be not only one of the best crypto stocks, but also one of the top Canadian growth stocks to buy while it's cheap.
Understanding DeFi applications in the post-fintech revolution. Fintech, defined as technologies that aim to empower the masses by ubiquitizing financial services, has failed. In a world of unprecedented wealth inequality, it has only served to enrich the already powerful, bankers, politicians, and insiders. Meanwhile, ordinary people are alienated, with no hope for their financial futures. Those fortunate enough to participate in the system see their standard of living deteriorate as a result of stagnant wages and rising prices. Even first-world necessities like stable pay and housing are distant privileges for the vast majority of the world's population, who lack any access to financial services at all. It is obvious that a new system is required, one free of centralized control and power, one in which people control their own financial futures. The revolution in DeFi. DeFi, or decentralized finance, is a new financial system being built by decentralized networks of individuals who have decided to provide financial services to one another directly. DeFi platforms can operate trustlessly thanks to cryptocurrency technologies such as blockchains and smart contracts, which enforce financial agreements through code rather than centralized authorities such as banks or middlemen such as escrow agencies. Because of their lack of trustworthiness, DeFi platforms can provide more innovative and equitable financial services to all. Staking is the act of locking up one's tokens to validate transactions in a cryptocurrency network, in exchange for a reward that typically ranges between 5% and 15% APR, which is significantly higher than the 0.01% APR provided by traditional savings accounts. Decentralized exchanges enable users to buy cryptocurrencies anonymously. Users can also purchase tokenized shares of stock on decentralized exchanges built with the most recent DeFi protocols. Users provide liquidity for decentralized exchanges. Users can do so by depositing pairs of tokens that can be used to perform swaps by others. This is known as liquidity mining, and it can provide APR rewards in the hundreds of percentage points. Through smart contracts and over-collateralization, decentralized loan platforms eliminate counterparty risk, allowing lenders and borrowers to collaborate without the use of middlemen. The absence of middlemen eliminates the need for creditworthiness records and ensures that rates are fair to all parties. These services, when combined, replace the old and inefficient methods of saving, investing, trading, and financing. Furthermore, because they are decentralized and trustless, these services are accessible to all. Nobody is discriminated against in decentralized finance. Users can safely collaborate without knowing each other's identities and without bias. Despite its enormous potential, DeFi has yet to achieve widespread adoption. This is primarily due to three factors: a lack of public awareness, a lack of understandable educational content, and poor user-friendliness on the part of the majority of DeFi platforms. DeFi chain a DeFi platform dedicated to providing financial services to everyone, is addressing these issues. DeFi Chain offers simple solutions, such as their all-in-one DeFi mobile app, which allows users to transact, mine liquidity, and trade both cryptocurrencies and shares. We hope you enjoyed watching and listening to this video. Please let us know your opinion in the comments area below. If you found our content useful, please like it and share it with your friends. Also, don't forget to subscribe to our channel and hit the notification bell for more crypto-related contents.